All right, for this video, I want to do a quick run through of the IRS Form 2441, which is used to claim a federal tax credit for child and dependent care expenses. So we've got the 2441 here. We'll go through the form, all the parts, and it is part of a full 1040. So we'll cover the 1040, all the other schedules, the credit limit worksheets that we need to complete in addition to this form. But before we get into the form, let's have a look at some of the basics on this credit, who qualifies for it, and then some details on the fact pattern that we're going to use in this example. So the Child and Dependent Care Credit allows parents and other guardians a federal tax credit for child and dependent care expenses. Now, this credit is most frequently claimed by parents that have their kids in childcare while they're working, but it's not exclusive to that purpose. So you can claim this credit for basically three categories of persons. So the individual has to meet what is defined as a qualifying person for this credit, and that includes children under the age of 13. It also includes dependent care expenses paid for a disabled spouse. So if you're married, filing a joint return, and you have a spouse that is disabled and needs dependent care, those expenses are also eligible, or any other disabled person who cannot care for themselves. There's more details on the nuanced rules within the instructions, but these are basically the three separate categories. In this example, we're going to be looking at a mother who pays for childcare for her son. So it's the most common example that we would see. Now, the amount of eligible care expenses to use in order to claim this credit is limited. So it's limited to $3,000 for one qualifying person, or $6,000 for two or more. And effectively what that means is it doesn't matter whether you pay $5,000 for care, $10,000, $50,000 per year for care. The amount of expenses that you can use to start calculating the credit is limited to these two amounts. So it's $3,000 for one person or $6,000 for two. The other limitations that we need to be aware of are the earned income limitations. So if your earned income is below these thresholds as well, that is further going to reduce the amount of credit that you can claim on this form. Now, ultimately, the credit amount is going to depend on your AGI, so your adjusted gross income. And when we look at the table, what you'll see is that the lower incomes generally result in a greater amount of credit. But if you are a high income earner, you're not precluded from claiming this. You're just going to be able to claim a smaller amount. Now, the credit is a non-refundable credit. So what does that mean? When we talk about federal tax credits, there are really two baskets. So there's a refundable credit and a non-refundable credit. Refundable credits allow you to reduce your taxes dollar for dollar, and if it's down to zero, you can still get some additional money back because it's a refundable credit. Non-refundable credits reduce your tax dollar for dollar down to zero, but if you have any credit left over, that excess is non-refundable. So you can't add that to your refund amount. So you have to complete these credit limit worksheets, and we'll look at those worksheets while we're completing the 2441. The other piece to remember with this is when you have your tax liability calculated, you must reduce it for any foreign tax credits that you're claiming before you work on this credit. And that's going to be evidenced in the credit limit worksheet. I'll show you how that all works. Now, onto a fact pattern here. We have Jane Smith. She's attorney, and she's going to be filing as head of household for 2024. And she has one son, John, who is 6 years old. Now, Jane pays $12,000 per year for childcare, and she pays for this childcare because she has to go to work. Now, her employer does not have an employer-provided plan, so the employer doesn't pay for any of this childcare. Jane's paying for all of it out of her own pocket. Now, the childcare provider, they give Jane an annual statement showing how much she paid during the year. And it also includes a signed Form W-10 certification. So W-10, very similar to a Form W-9, right? It's going to show the dependent care provider's name or company name, address, tax ID number, and all that information is really important because you need it to complete the 2441. And high level, the numbers that we're working with here for Jane, so she has AGI of a little over 80,000. Her tax liability is 6644. And so at the end of the day, what we're going to see is she's going to be able to claim a $600 child and dependent care credit to reduce her taxes. Now, she's also going to get the $2,000 child tax credit, but we're not going to cover that in this video. I want to leave this video exclusive to just the 2441. I'll put links in the description to other CTC videos I have on how to complete those forms. All right, so let's have a look at the schedule here. We have the form 2441. We have Jane's name and her social security number at the top. And items A and B we have left unchecked because they are not applicable to her for this scenario. Now, in part one is where we list the individuals or the organizations that provide this care. If you have multiple providers throughout the year, you would check this box. And, well, if you have more than 3, that is, you would check this box, enter the information, and then attach supplemental statements. In our case, we just have the one child care provider, so we've entered their information here. So we have the care provider, the company name, address, and the company's EIN. This is really important. So the EIN or social security number has to be entered, or else you're not going to be able to claim the credit. And so really, really important to get that W-10. So we've got the EIN. The care provider is not a household employee, right? This is a separate company. And the amount of expenses paid during the year is that $12,000 figure. Now, if you received any dependent care benefits, right? So if your employer covered some of it, you would have to complete an additional part to this form, part 3. For our purposes, we only have to do parts 1 and 2. So we just move on to part 2 to start working through the credit for the dependent care expenses. So we've got the information on Jane's son. So we have John Smith and we have John's social security number. We have not checked this box as it's not applicable to him for column C. And then we've entered the amount of expenses from up here that applies to John. So we have one provider, we have one qualifying person, so 12 and 12. Now moving on to the rest of the form. So on line 3, add up the amounts in column D of line 2, so that's up here. Do not enter more than $3,000 if you had one qualifying person, or $6,000 for 2 or more persons. So this is the initial limitation, right? So even though we have $12,000 of expenses, the most amount of expenses that we can use to compute this credit is going to be limited to $3,000. Item 4, we have the earned income. So the earned income are your wages, self-employed earnings. If you had earnings paid to you via a partnership that you actively participated in, you would put those there. If we have a look at Jane's page 1, we can see her W-2 wages, that's her earned income, is $80,000. She has some investment income down here on line 2B, $5 of interest. Interest income is portfolio income, it's not earned income. So that's why we're listing $80,000 and not the two of these combined as the $80,000 $5 figure. So if I go back here, so we've got $80,000 in earned income. Line 5, we simply enter the $80,000 again because we are not filing a joint return. If you're filing a joint return, you would enter your spouse's earned income on line 5. In our case, Jane is filing as head of household as an unmarried individual, so we just entered the $80,000. Line 6, we would enter the smallest of lines 3, 4, or 5. So this is the second limitation that would apply for this credit. If your income is below the $3,000 figure, then that would limit the credit amount to that lower figure. In our case here, her earned income well exceeds the $3,000 figure, so we just use $3,000. Now on to line 7, we enter the amount from Form 1040, line 11. So this is her adjusted gross income. So if I go back to page 1, we scroll down a bit here, Line 11 is the adjusted gross income, or AGI, for Jane, which is the $80,005 figure. So we enter that on the appropriate line there, and now we look at the table. So the table, we are entering the decimal amount on line 8 depending on where that AGI falls. So the $80,000 figure falls within this range here, so $40,000 up to the no limit. So the decimal amount for Jane is going to be 0.20. So 0.20 is entered on line 8. And then we go on down to line 9A, which is multiplying the $3,000 figure times 0.2, and we're left with $600. Now line 9B we've left blank here because it doesn't apply to us in this scenario. But if you did pay for expenses, so you paid for 2023 expenses in 2024, you would complete the additional worksheet available in the instructions, and so you would require an adjustment on line 9B. In our case, it doesn't apply. So line 9C, we simply add 600 plus 0, and we're left with $600. Now that we figured the credit, we have to apply the tax liability limit that might further reduce this amount. Because remember, the $600 credit, this credit is a non-refundable credit. So you need to have tax liability in order to be able to claim the credit. And if your tax liability is less than the credit, you can reduce it dollar for dollar, but any excess is lost because it's not a refundable tax credit. So let's have a look at the credit limit worksheet. So we'll scroll on down to the worksheet here. This is a comprehensive worksheet that factors in a lot of different credits. There's a more simple one in the form instructions that you can use, the form 2441 instructions. But the starting point here is the amount of tax from line 18 of the 1040. So if we go back up to page 2, we can see here we've got our taxable income of $58,105, taxes on that amount $6,644. Schedule 2 are additional taxes, so they include things like self-employment taxes, net investment income taxes. None of that applies to Jane, so that's why that amount is 0. So the total tax before calculating this limitation is $6,644. So that's the line 18 figure that we're starting with on this worksheet. So line 2, there's the foreign tax credit, or the FTC adjustment. So if you have any foreign taxes that you're claiming a credit for, which would be reported on Schedule 3, you have to enter those here. In our case, Jane doesn't have any foreign tax credits, so we've left that blank. So the amount of tax that we're working with before applying the credit is $6,644. We've entered the amount from line 11, right? Form 2441, line 11, $600. And so we have plenty of taxes to be able to use this full credit. So going back to the 2441, we've entered the $6,644, and then on line 11, we have entered the final number. So this is the actual credit amount that we're going to be able to use, which is the smaller of line 9C or line 10. So line C, $600, is certainly smaller than the line 10 figure of $6,644. So that is going to be the amount of credit that we're going to be able to claim on the return. So once we have this credit amount, we enter that on Schedule 3, line 2. So if I scroll up here, Schedule 3, we have additional credits and payments. And on line 2, we've entered the $600 for the credit for child and dependent care expenses from 2441. So there's our $600 amount. Now, if we scroll back up to page 2, we can have that amount flow through. It's coming through and report on line 20. So the amount from Schedule 3, line 8, there's our $600 figure. You'll see here the $2,000 credit for the child tax credit on Schedule 8812. Remember, I highlighted she's going to get that credit as well, but we're not covering it in this video because I wanted to leave it exclusively to the 2441. But we can see the math here certainly reduce her taxes. So she was starting with $6,644. She got a $2,000 reduction for the child tax credit, a $600 reduction for the dependent care credit. And so now her adjusted taxes owed is $4,044. So she went from $66.44 to $40.44 because of the CTC and the child care credit. So ultimately, this increased her refund quite a bit, right? Her refund is $2,456. Had she not claimed these, she would have owed money, right? She would have owed some funds to the IRS if she wasn't eligible for the CTC or the child care credit, but she was able to claim both, and so that's good news for her. All right, so that covers it for this video. I hope that was helpful. As always, I appreciate you watching and look forward to seeing you on the next video. Thank you.